Nvidia stock has fallen from grace, and we're not trying to criticize it, but we want you to remember that companies don't stay amazing forever, and the story can change very, very quickly. In the last year and a half, we've made many videos on Nvidia, and people were saying in the comments, go look at them. Oh my God, you guys don't get it. This is the future. And now all of a sudden, the slowdown in chips has started to occur and people are worried. Let's look at Nvidia stock using our software, and I will start to show you how the fall of grace can happen very quickly. The company is currently at $130 per share. The 52-week high is $346 and the low is $120. That's almost a 66% drop. That happens. It can definitely happen. It's happened in stocks that I've liked. But I've entered those stocks way after the initial fall because we don't want to overpay for everybody's assumptions about the future. And when a company has a lot of hype behind it, like Nvidia did, and the story was great for a while, just remember, in business, they'll go back to the normal, they'll go back to the average. It's very difficult for amazing things to keep going forever. If you look at our videos, we will sit there and say, okay, the chip shortage was a big issue, right, Mo?
Still going on.
And exactly. But now you're starting to see, first started with Intel. They had a 17% drop in revenue. And we were like, holy cow.
Yeah, we thought it was only Intel.
And then Micron announced 23% drop. And all these things started to happen. So with Nvidia, what's the story here, Mo?
So Nvidia is big in the graphics processing world. Video games, cars, crypto. So crypto is a big thing. They went all in on crypto to be the developer for I'm going to try to say this like I know much about crypto. But when you're looking at your crypto screen, you're looking at, it's got to be there. That was all graphics. Ethereum, they were huge in Ethereum. That's the second biggest crypto in the world. They were huge with that. Video games, they're in all of these. Anything where you see the graphics, probably.
Well, in the video games, look at all the companies that made video game gear. During COVID, they skyrocketed. People were sitting at home. And by the way, Nvidia makes a phenomenal product. They have for 20 plus years.
They're in Range Rovers. They're in our cars.
Are they really?
Yeah.
Oh, look at that.
They're great products.
But look at this. So 2020, 07 to 2020, they did $3.87 billion in revenue. 07 of 2021, $6.5 billion. Do you understand this big hype story right here? 07, this last quarter, they barely grew. They barely grew. That's the big key here, guys. We always said it about companies that really skyrocketed due to the COVID shutdown. Is this sustainable? I don't know what the future holds for Nvidia, but this is why we encourage talking about margin of safety. So let's look at this company in a little more detail.
And I think it's important to point out to those of you that are new to investing, this is a company that had really good net income for a long time. It's not like it was a Peloton where it never made money. This was a big company that did make money, still making money, and the stock has been decimated.
Look at the 5-year profit margin, Mo. 30%. That's after taxes. Last year, 26%, and their gross margin is 60%. Guys, these are software-type numbers, and it's a hardware business.
Right.
They do a really good job making money. I don't know about this whole dividend. Is this accurate? $400 million? Why even pay a dividend when it's 0.1%? But guys, they have the free cash flow to support it. $5 billion in average free cash flow for the last 5 years. But one thing I want to look at before we do our deeper dive into the 10K, let's look at the 5-year free cash flow. So look at the last 10 years. 600 million, 600 million, 900 million, a billion, 2 billion, 4 billion, 2.5, 5. So the growth was happening even before COVID. So that's what I like seeing. It's not like sometimes what happens, we'd see like, a billion, a billion, a billion, and then COVID hit, it's 5 billion, 6 billion. You go, okay, wait a second.
Yeah. Or you'd see negative 8 billion.
Yes, and that was always a concern. But here, we don't see that. So from my standpoint, in high school, I was a computer nerd. I loved computers, and we always knew NVIDIA. We thought they were great. 2000, they've never taken the brakes off their domination of the graphics market.
Yeah.
And that's what's great. They have a great brand there that probably isn't going away. So the question you have to ask yourself is, let's look at the 8 pillars and see, is this sustainable? So first off, they've slightly increased their shares outstanding, 5%, 4.5%. It's about 0.9% a year over the last 5 years. Not a big deal, not worried about that. Everything else I like. $18 billion in more revenue, lets the $3.4 billion in more profit, and then free cash flow of $2 billion. Higher return on invested capital, but look at this, guys. 65 times the 5-year profit and 5-year free cash flow. Now, they had a lot more profit and free cash flow in the last year or two than they had in the previous 3 years, so that could be swayed there. But again, the question you need to ask yourself, is this sustainable? In this revenue number, let's go to the income statement again. Let's look at it from a 4 quarters perspective. They've doubled in the last 2 years.
To me, that just screams unsustainable.
I hate to be, I'm not trying to be negative. My job as a value investor is to be conservative and have margin of safety. If I were buying a business today, which is what you're doing when you're buying a stock, if somebody came to me and said, Paul, buy my business, and here's the last 5 years, when I was seeing decreases right here, I'd be like, okay, so what happened? Okay, I'm a little apprehensive. Let me make sure I base it on a more stabilized level, okay?
So I'm going back here to 2003,
Yep.
20 years, and I'm looking and saying, in their revenue, is there anywhere that they doubled? Maybe they do it every 10 years. No, they don't. There's no doubling except for one crazy anomaly situation. That's what makes me say, probably not sustainable.
I think that's a very good observation.
Probably not sustainable.
I think that's a very good observation. Okay, let's see what analysts are saying. Okay, they still have, oh wow, look at these EPS growth numbers, Mo.
Are you nuts?
Oh yeah, they have it.
Oh.
Yeah, I mean, they have it doubling in the next 5 years, 6 years.
And 15.5% revenue growth too.
Is it really?
Yeah.
Okay. And there's a lot of analysts here. There's 48 analysts here. That's almost 50 analysts. Now, these aren't the only analysts out there, but this is a big chunk of them that we get from our data feed. So that's pretty interesting. So I like looking at the analysts from the standpoint of where they see revenue growth going. The chip industry, the graphics industry, this is a double-digit growth market for the next 10 years. As the world gets more developed, as we use more and more products, you can see it. Look at how much we use our graphics now versus 10 years ago. And it's a night and day difference. Imagine what's going to happen in the next 10 years. Yeah. So I think Nvidia having a great company at a good price. Yep. So what does that mean? All right, Mo, so what's the bull case on Nvidia?
So bull case, they have a very low fixed cost structure compared to the Intels of the world, the Microns of the world. And something that we were just talking about, can you name another graphics card company that just does graphics card? Yes, AMD does it. Yes, Intel does it. But these guys just survive on graphics cards.
And they dominate. Like the nerd friends of mine in the past 20 years who built computers, they always said NVIDIA. Yeah. I had an intern build me a computer upstairs, NVIDIA graphics card. Yeah. Now, going back to the cost structure, remember what I was saying, guys, about the gross profit of 60%? I was actually surprised because this 30% bottom line margin is after taxes. So they do have a very low fixed cost. The fact that their gross margin is 60%, which is good, but let's look at a company like Intel. Well, maybe not Intel. Let's go to AMD because people are, and look at AMD. 48% gross margin versus 60, okay? And then look how much of that's eaten up. Goes down to 14%. It goes down to 14% for their overall profit margin. Yeah. That just tells you there's a much higher fixed cost component to AMD versus a company like Nvidia, which is very flexible for the company. They don't have a big nut to cover if things were to fall hard. Right. So that's a very nice bull case for Nvidia. But for me, it's also more about when you talk to like the nerds, they love Nvidia.
Exactly.
Right?
I mean, I asked 4 guys in this room and nobody knew another company.
Yeah.
Exactly. In that world.
Okay. So what else is there? What's the bear case for Nvidia?
So the bear case really comes down to a big thing is that crypto space. You need to understand the sales that they're going to make. Sales maybe they're not going to make. Also, I just thought about this. Video games. We know video games are shifting away from that console. You're kind of downloading your games now. Yeah. How is that going to play into this?
That's going to help Nvidia.
You think it,
I think it's going to help Nvidia because now it's going to be more about what computer you on, what graphics card you're using on your computer, all those things. That's what I think, but maybe I'm wrong.
Because I'm just thinking about if you're buying a system like a PlayStation or an Xbox or Nintendo, whatever that is, maybe they're not going to have contracts with them. They're not going to have as big of contracts with them. I don't know. But the shift is going to go to computers or TVs or whatever it is.
Yeah, absolutely. So. And, it's when you see that different shift, from a graphics card, when I use my computer upstairs, like now, because of some of the things I do, even with stock research, and we're doing stock charts and stuff like that. For our software here, I want a good graphics card. Go ahead.
Another thing I think you need to look at for the bear case, look where we are in the cycle of chips. I mean, there's a lot of CEOs saying we're not going to solve these issues until 2025. And what happens in 2025? What does the chip market look like going forward? I think that's a big question throughout the chip market, not just for Nvidia, but you have to factor it in.
So go ahead.
Good thing is we're value investors. We look long-term. We're looking 10, 15 years down the road. So don't take fully and say, chips are screwed for 2 years. I'm not investing in this. That's not the case.
And that's what I was about to say. Yeah. So now the goal is, to me, the biggest bear case is valuation. Yeah. So we haven't run it through stock analyzer tool, but the key then is to sit there and say, okay, let's factor in these nuances of this potential downshift and all that stuff. And let's go look at it from a long-term perspective, being conservative on our assumptions. Can we buy NVIDIA at a decent price that can factor in long-term growth of high single digits or low double digits growth over a 5, because that market is going to grow 10% a year for a while.
Absolutely.
So let's go. Should we jump right to Stock Analyzer tool?
Let's do Stock Analyzer.
Okay, so, oh my God, look at this revenue growth in the last 10 years. And that's the thing. People are going to see this 10-year revenue growth of 24% and immediately want to put in 20%. It's like, guys, the bigger and bigger a company gets, the harder and harder it is to grow at high rates, okay? Mo, on the high side for revenue growth, what do we put in?
12%.
I agree. What about middle?
9.
I love it. Low?
6.
And here's why I like that so much, guys. 6% is very, very low, but there might be some hurdles along the way. So even if they get through the hurdles and there's a fall in revenue, as long as they can grow back to that double-digit level again, overall blend would be still the same level at 6%. All right, now profit margin.
26, 26.5, and 27.
So I actually disagree.
Okay, which way?
I think we should go lower because I think if there is a drop in sales, they're going to have to get rid of some inventory that will be a hit to the profit margin in the short term. So I think we should go a little.
What about thinking out long?
Right.
Like,
so then
I think that happens within 3 years or something.
Correct. But then if we have, let's say they drop to 22, 23% for 3 years and then get back up to 26, 27% levels. Okay. So I look at my personal belief is 24, 25, and 26. I think the last 2 years have been very profitable.
Okay.
What about free cash flow?
I would go with the same numbers.
I agree. PE. Okay, guys. PE is currently 42 and 52. For price to free cash flow, PE of 42. Now remember, this PE is what do you think the company PE will be at the end of 10 years? At the end of this 10-year period, it'll be a much bigger company, a lot more established. So you have to sit there and wonder what's the growth potential after they've already more than doubled in the next 10 years.
Yeah.
Maybe even tripled in the next 10 years, potentially.
14, 16, and 18?
I think that's fine to me. And a lot of people might disagree with that. And I get that.
I know people are going to disagree.
But remember, guys, the bigger the company is, it's harder to justify it. It could very well be justifying a much bigger PE, but our goal as value investors is to be conservative up front and be realistic.
I mean, I look at this and say it's a $326 billion company. How much more can they grow? Yes, they can grow. I mean, what was their valuation during COVID? I mean, it was probably nearly $1 billion. Well,
look at their revenue. What's their revenue last year?
Let's see. Their revenue was $29.75 billion, and I don't think that's going to be sustainable.
Right. So it's going to be a little, he thinks it's going to be a little bit of drop and then a rebound back. So even if it ends up at 60 or $70 billion in revenue for a very niche business of graphic cards, I mean, is it potential? There's a lot more. Yeah, there could be a lot more growth potential. I was wrong on Amazon's growth potential, but my goal as a value investor is to still be conservative up front. And when the market shifts against the company like it has for Nvidia, which it probably will continue to if the NASDAQ continues to fall, be able to buy those shares.
And when you were wrong on Amazon, it was a lot less established than Nvidia. We have a pretty good direction of Nvidia. Don't you think? I mean, what was that, 10 years ago?
Yeah, but Amazon was still doing $60, $70 billion a year in revenue then. Okay. But they also got a lot more. I mean, they went nuts.
They literally sell everything now.
Yeah. And I didn't see the AWS thing happening, so I was completely just wrong on Amazon. Yeah. But guess what? So many other companies, that's the one time Google and Amazon were the one time I was wrong on potential growth potential for a company. The rest of the times it's actually ended up working out exactly. I mean, I'm like, that's not sustainable. It's not sustainable. So I'm going to be wrong at times, but usually I'm wrong, and it's because the stock flew in terms of revenue growth. All right, so what about desired return, Mo?
13, 15, and 17.
I am fine with that.
Okay. $130.50, the current price.
So we hit the analyze button. Oh boy. 41, 50, and 60. So 40, 50, and 60 bucks. I have it currently on my watch list at 75. Why is that? At 75, I'm going to take a much, much, much deeper dive, make sure these assumptions are accurate above, and start selling puts on it to buy it at much lower prices. Okay? Yep. I feel like we have done a decent job of seeing now, should you do more research? Sure. But the whole point is, now, like the real question is, where is this market going in the next 10 years? That's the big thing. As the world gets better and better, they have dominated the graphics industry for a long time. So if you're new to our channel and you like stocks individually, I invite you to watch 4 or 5 more videos. You'll walk away understanding money and investing a lot better. And especially if you want to buy individual stocks, you need to understand the process of doing a deeper dive, which we've started to do here, and how you look at a company from a long-term perspective and its growth potential and how that translates into a price to pay today. Thank you very much for your time.